not enough to only see the GEX level. It's much better to look at GEX
as a premium seller, you get more premium when things are.
I believe you need to understand the whole big picture.
It's actually better to look at the put level, especially when we're in a negative gamma regime, and think of that as Hey everyone, thanks for joining. Today we have Gery from TanukiTrade with us. He's going to be diving deep into the TanukiTrade platform, showing us new updates, what they have worked on so far, and also how to use GEX in our everyday trading, right? He's a swing trader expert. I use GEX for 0DTE, so we're both going to talk about how we use GEX for different types of trading. As always, if you want to try out TanukiTrade, we'll have the links below. Use my link for 10% off.
Hello everyone, thanks for having me here. My name is Gery Nagy and I'm the Chief Options Expert at TanukiTrade. I started options trading in 2006, 20 years now, and my main expertise is in swing trading. So I have been trading with calendars, diagonals, butterflies, usually for a couple of weeks to a couple of months. So I'm not a day trader type. I never trade 0DT. My specialty is in swing trading using options, and that's it.
What is the biggest misconceptions for beginners when they look at GEX?
I think the biggest one is that beginners look at GEX as a prediction tool. So for example, if they see a put wall, they think that the market will bounce and the put will support. This is not GEX is used for.
Agree. And I think it's much better to look at the put wall as like a huge reactionary zone.
Yes.
Like, you know, the market can bounce, but it can also continue to go down if, you know, people roll down their puts.
Yes, it's much better to look at GEX as a reaction zone, as an activity map, something that you have to pay attention to. As you also mentioned, it's not a prediction. It's not like a crystal ball that we see a put level and then the market will bounce because there is a put level there.
It's actually better to look at the put level, especially when we're in a negative gamma regime, and think of that as a target.
Yes.
Than like a level where we will bounce.
Yes, I agree. We started building TanukiTrade like 2 years ago when we realized that the TradingView platform did not have the right options metrics that is useful for our trading, like GEX, the options, the implied volatility skew, the implied volatility rank, and all the very useful options metrics for options traders. This is how the whole idea became into existence in terms of the TanukiTrade application on the TradingView. And later we started developing the web application because on the web, on our own platform, we have much more control over the data and how we visualize it, how we present for traders. And that's why we are working on two platforms, our own web application that you will see later on, and also on the TradingView platform where we are developing indicators for options trader, for swing trading, and for 0DT or day trading applications. The main goal for TanukiTrade is to give the traders a better idea where the reaction zones in the market are, where the very important levels are. We would like to give a map of the underlying product based on the options pricing and the options metrics behind it.
I think I want to kind of mention what I love about TanukiTrade is that I feel like you guys are always trying to roll out new features constantly. Like I see new updates all the time. And so I think that makes it different from other GEX tools that I've seen, right? And then it's important to also talk about pricing because that's something that people care about. And I think like your price is very affordable for the value that you provide. And I know there are GEX tools that charges like $200-300 a month. I'm not gonna name who, but there are a couple of them on X, and I don't think those are worth it in my opinions. Like they're providing like basically the same type of information that you are, just like different UI and different way of presenting it, but it's the same type of mapping. And I feel like you're providing that at a much more reasonable price point. And also the support that you provide is definitely something that's worth calling out, right? I think like anytime I had a question or somebody from my group who had questions, like I can go to you and get immediate help on that. And I don't think that's something that can be said for other GEX platform.
Thanks for the great feedback. I appreciate it. We have a lot on our ideas in terms of the development roadmap this year. We are definitely working on brand new ideas as well. To understand GEX, we need to dive a little bit deeper into the option Greeks. There are two important option Greeks we need to talk about, the delta and the gamma. The delta is the sensitivity of the options based on the underlying move. So delta measures how much the option price will change if the underlying moves 1 point up or down. That's why we can have positive and negative delta. And gamma, where the gamma exposure comes from, is the sensitivity of the delta. So it's like a second derivative of the delta or the option price. And gamma tells the market maker how much delta they have to hedge. So the whole GEX concept is built around the hedging need of the market maker. And this is what we are showing on the charts and with the indicators. What are the GEX levels? The GEX stands for the gamma exposure. How much gamma and a specific strike at a call or put strike of the underlying at specific expiration holds.
You mentioned how delta, there's positive and negative delta. The same thing applies for gamma. There's positive and negative gamma, right?
Yes,
so
right.
Positive gamma is on the call side and then negative gamma is on the put side. And so that's why when you see these call walls and put walls, they shows you the positive or negative gamma exposure.
Yes, exactly. On the chart, we differentiate between the positive gamma regime and the negative one, because we need to think about in 4 layers. The first one is somebody needs to understand what volatility regime we are trading in. As you mentioned, if we are trading in a positive GEX environment, the volatility tends to be lower and the moves tends to be also lower than in high volatility regime. What we call on the chart the HVL line, this line in here, stands for the high volatility level. If we are above the high volatility level, usually it's a positive gamma zone. If we are below the high volatility level, it's a negative gamma zone. And as you also mentioned, if we are in negative gamma zone, the moves tend to be higher. And that's why we can see more violent bearish moves if we are under the HV aligned high volatility level. And it's exactly, it's easy to see on the chart right now, for example, on Apple, or if we switch to SPX, intraday chart, that right now SPX is below the HVL line. We are in negative GEX zone, right now sitting on the highest put wall in here around 6,600. So if we are in a negative GEX zone or volatility regime, we might expect a higher, more volatile move of the underlying. And that's why we need to understand where those levels might be. We always say that these levels are not like prediction or directional indicators. They are not telling you where the market will go. So if you see a level like that, you cannot assume that the market will gravitate towards that because there is a level. What we need to understand is where the reaction zones are in the marketplace, and to see kind of a hidden activity map or a structural map behind them, the moves based on the options metrics behind it. So this is what we can show on the chart, either on intraday or swing trading fashion. And what we also believe in that we need to think about 4 layers. 1, we have to identify the volatility regime. 2, we have to identify where the most important GEX levels are. The third one is what is the positioning, the open interest, where is it spread, and how is the volume today? So where is the flow? But here what we can see is the SPX 15-minute bars on 50-minute charts on the TradingView application. We have developed different kinds of indicators for trading. One is showing the GEX levels profile, as we call it, on the underlying product for different expiration. The other one is the Overlay Pro indicator, which is more geared toward the swing trader types. And the other one is the options oscillator that you can see here, for example, down at the bottom of the screen for the Apple swing trading methods, for example. For example, on Apple, that I selected the every GEX expiration in here. This one, the every expiry, which is more than 1,000 days to go. And this is what I also wanted to show in the GEX Live Chart application, the other platform of TanukiTrade. Here we can see different things, more granular things than we see on the TradingView application, because we just introduced a very pretty unique and very new feature in this web application, which we call the secondary matrix or the GEX explanation matrix. Right now, what we can see, if we are compare this view with the TradingView, on TradingView, we see the GEX levels. On the web application, we see the GEX levels here with C1, P1, and HVL on this expiration on this time frame. But we also see the other option metrics like the call volume, the put volume, the absolute open interest, absolute GEX, and the rest we can see on the chart as well. It's a visualized way of the bars in here. In a nutshell, what we can see here is that we can have different metrics put in these columns. And for example, the net volume, the net detailed volume, I'm not going to go very detailed in it because we will have another YouTube video on it and it would be too long. But the main important metrics that someone can see on these charts are the GEX, DEX, the open interest, the volume, the net volume, and the absolute GEX. And what is pretty new with this application is that, for example, you need to focus on the confluencing levels. So for example, right now what we can see on the QQQ is that the HVL line confluences with the highest put volume from yesterday because the market is not open yet, highest call volume, the absolute OI, the biggest absolute open interest level, the put open interest, the highest absolute GEX, and also the put transition zone. So this zone, if you click on it, it will explain everything to you. If you don't know what PT or EB1 means, this explanation will tell anyone that what do we mean by these labels. And we also try to tell people the confluencing levels. But we believe in that if you find a GEX level which confluences with different other metrics, the more confluence, the higher reaction it might make on the market. So if you look at these levels, the higher the confluence is, the most important level that might be, if the market reaches that point, you don't know what will happen next, but then you know that at least you need to pay attention there and watch for the momentum. That's pretty useful to understand because especially if you are trading zero DTE, you want to watch the volume, the positioning, the open interest, GEX, and all the rest. It's a secondary metric in your own trading. So we assume that everybody has their own trading style. So giving these levels, giving these insights on a chart in a visualized way would help people to understand where they need to pay attention. And if you scroll down here, we also have a zone context analysis where we explain how the current GEX profile looks like. So how to read the map. Where is the map right now? Right now we are in a negative zone. As you also mentioned, there are different zones. Negative GEX profile and positive GEX profile. Right now we are in negative GEX profile, for example, in QQQ, approaching the highest put level down here. Right now here, this also corresponds with the second biggest absolute GEX and also the net put open interest. So I'm not sure what the market will go. This is not a directional indicator, as I mentioned. But what I need to know, where is the next level that I need to pay attention? Where are the reaction zones? Where are the quote-unquote landmines on the chart that might create a reaction? And then I need to pay attention to it. Applying or visualizing this on the chart might make it more easier for traders to see what are the most important levels, what are the activity map or activity zones of the current underlying. But if you want to see these levels more granularly, for example, open interest, you can see it here on this metric, but you will also see it on the chart visualized in a horizontal line. If you want to see the net volume, you will also see. But the biggest one will be also shown on the chart, like here, the call volume and the put volume.
For the volume, that's one of the metrics that gets updated every minute, right, on the web app platform?
Yes, it's very important. The metrics updates every minute. And on the TradingView chart here, it only updates 5 times a day because of the TradingView limitation. Yeah. But that's why we introduced a new feature in here where somebody can copy our GEX levels from the web app and paste it to TradingView. I also created a YouTube short tutorial about it, how to make it. But if you are a 0DT trader or day trader and using the TradingView, but you want to have very updated and fresh levels in terms of GEX, you can anytime copy from here to the TradingView application, and you will see a very refreshed, updated data on your TradingView as well. Otherwise, it's only refreshed or updated 5 times during the trading day.
I didn't even realize you can change the different metrics on the side until
Yeah,
you
you can.
pointed out.
Okay, I will show you another interesting thing. Going back to this very new development, if you click on the GEX level and chart settings, there are many things that you can set up in here. I don't want to go into too much details into it, but one is very important, the zone coloring. You will see the positive gamma profile zone, the transition zone, the negative, and the extension zone. You can enable them, disable them, but if it's enabled by default, you can see visually on the chart that we are in a red zone, which means that we are in negative gamma territory. Here, we are in the transition zones that we call it. And above that, in the green line, green zone, we are in positive gamma territory.
Yeah.
And if, for example, you want to see more granular levels or very like the relative size filtering filters out the minuscule levels on the chart. Let me explain that. Here you can see the net GEX distribution here on this bar, but you also can see like C4, which stands for the 4th highest core wall based on the size of the bar. But if you don't want to see them relatively, you can filter them out. If you say, for example, that 50% the relative size filtering, it means that based on the relative height of the biggest bar, you filter out all the bars on all the lines on the chart that are below 50%. So if you want to get rid of quote unquote too much noise, you can do that by this. Or, for example, if you are only interested with one secondary gamma wall, you can just decrease this number. If you are not interested in absolute GEX, or you don't care about delta exposure or volume or anything like that, you can get rid of it. But what you cannot get rid of is the C1, HVR, and P1. C1 is the biggest core wall on the upside, P1 is the biggest put wall on the downside, and HVR is where the volatility regime shifts, the high volatility level.
I mean, those are basically the most important levels.
Yeah, those are the most. If you want to have a very minimal one, click on minimal and it will disable everything. If you want to see all the details, click on everything. And it will show you all the different levels and labels. And if you click any of these, it will give you an idea and the definition of what it is and how to read it.
Which one is your default setup?
Secondary gamma was 3, I would say, and relative size filtering to 25. Going back to the thinking framework that I mentioned, the 4-layer, the volatility regime, the GEX lines, the positioning, and the volume. Right now, all you can see it on the chart. You can understand where the reactions, the highest levels are in terms of the potential reaction of the market. But again, it's all based on the expiration. So if we are as an ODT trader, we go back to March 19, which is today. If we are more of a swing trader, we can go to all expiry, because all expiry will show you all the data previously gathered in every single expiration before the furthest expiration. This is important here, the cumulative and the standalone exposure. The cumulative calculation method aggregates everything before the current selected expiration. The standalone only shows you the one that is selected. It's a very different calculation method. We recommend using the cumulative one for swing trading. For 0DT, it doesn't matter because there is nothing before 0DT. It's today. Which part of the TanukiTrade do you use on a daily basis?
I use the GEX Live, but now that you show me all these new features, I think I have to use the GEX Live Chart. I use the GEX Live table.
Yeah, that's a good news for you because we also introduced this secondary matrix on the GEX Live table as well. If you click in here, you will go to the same settings that I showed you previously.
Oh, that's cool.
And you can customize it the way I did it on the charting settings or chart view. So these little lines and these little labels will also show you the same information that we were talking about in the chart settings. So if you are accustomed to using a table, you will also see these heat maps, zone coloring of the different profiles and areas or zones. And you can also see the core volume, the net core volume, data exposure, absolute OE, and all the rest here as well, based on the strike and based on the selected expiration. You can also copy the levels from here to TradingView if you want. And actually here you can also see the different metrics that we were showing here. These are the same metrics that you can select, but here we have 3 columns. The metrics are the same here. So these are just 3 columns, and you can position the most important one for you. For example, if I trade on this chart, what I use on the left side is the net open interest, and on the right side, what I tend to use is the net GEX and the detailed volume, because I want to see the volume reaction of the market at current levels. I want to see the absolute net open interest that never changes during the day. We know that. That's why it's on the left, because it's less important than the other ones. And the net GEX, how it's changing during the market when the market is open. For me as a trader, I like this setup. And
I like it too, actually.
Actually, I really prefer the charting view much better than the table view, but I know people also love the table view. For me personally, the charting view is a much more helpful visual way. And previously, what I could only see is the distribution of different GEX and distribution of different volume and stuff. Right now, with the secondary metrics that we introduced in here, it's much more easier to see. For example, where is the highest put open interest? It's here. Where is the highest call volume? It's here. I can see these metrics without changing the columns in here, because once I want to see the absolute GEX, okay, where is it? Then I have to change back to volume. Okay, where is it? And now everything can be seen on the chart as a secondary metric drawn with a horizontal line based on your settings in here. So that's why it's much more visual than previously. Previously, you could see everything, all the raw data you could see here in the distribution settings in here. But now, based on your settings, you can watch anything on the chart that has an option matrix or raw data behind it. What's also probably pretty helpful is if you click on these labels, that people can understand the gamma profile. It will explain what is the meaning of the current profile we are in. It will not give you signals or predictions or directional, bets. It will give you an idea where we are and what you need to pay attention on. Now that we have talked about the GEX Live table, let's go back and just very briefly, I would like to mention the GEX Matrix and the option screener that we developed. The GEX Matrix is good for seeing the whole picture of an underlying. So here you can see the cumulative and the standalone GEX profile, and also the DEX for every single expiration. And if I zoom out a little bit, you will see it more clearly, I guess, that, for example, on this underlying, the QQQ, whole GEX profile is pretty negative if we look around in the next coming expirations on the cumulative side. And here you see it on the standalone side, which expirations has the highest net GEX impact. And right now what we can see is the monthly expiration for the March 20th. And if we scroll down, there are different important ones in terms of DEX and GEX. And the other thing that might be useful for swing traders is that how the GEX changed. These are the delta GEX levels on standalone and cumulative in here. So how the GEX changed from the previous day. If you are a swing trader, it might be useful to know that, was it become more negative or it became more positive? How the GEX profile changed in one day. So it's the rate of change of the GEX profile. This is what we can also see here. And the whole overview of the GEX and the other option metrics in this GEX matrix. Here you also see the implied volatility, the skew, and the rest. And actually, I can talk hours about these options are metrics. We also created a YouTube video about it for swing trader. I don't want to go into much details in here. And the other one is the option screener that we developed based on the idea that if somebody wants to find underlying based on different GEX profiles and, for example, pricing skew for swing trading, it's easy to do it here in the option screener. I know to cover everything in option screener would be another hour. So just very briefly, Here you can see the GEX profile of the underlying. We are covering around 200 underlying products in the US stock market. Using the filters, you can filter them, for example, the highest liquidity and looking for the GEX Matrix, for example, let's look at all the profiles that are negative below HVL. So here you can see all the underlyings that are negative below HVL, or there is a negative extension zone. So they are, I'm not saying oversold because you cannot say oversold, but here you see negative GEX profiles. If you want to see, for example, positive GEX profiles or positive above HVL, you can also find. So for example, in a bearish market, let's find the ones that have positive GEX profile, or at least above the HVL. There are different metrics, a lot of metrics. For example, if you are like looking for pricing skew, where is the highest call pricing skew versus the put pricing? It helps swing traders to find the candidates that they are looking for example, high implied volatility crash in the last 5 days, or where are the biggest call pricing skews if you are, for example, into buying call butterflies on the upside. Because if the market is pricing the call side much higher than the put side, standard butterflies are much cheaper. So these are all swing trading metrics and tools that somebody can use. Here, looking at the vertical skew, there are different things in here you can use.
I'm surprised gold is above the high volatility.
Yeah, it is.
Gold-
It is. So for swing trading, it's a good tool to have ideas, or at least filtering down the most liquid ones for different volatility regimes. For example, what I also like to do is looking for vertical price. Is there any core pricing skew in this market? And gold has a very high core pricing skew. We call a core pricing skew is the vertical skew. So for example, it tells you that how much core prices are more expensive than the put pricing at the same equidistant level. So right now, it's not a surprise that GRD, SLV, and the rest has a very high core pricing skew because the demand is there. But if I wanted to see like what is the highest put pricing skew, minimum 60% or IVM, that's interesting. There is a pretty high put pricing skew. So it means that puts are way, way, way more expensive than calls in terms of the Russell 2000 ETF.
I mean, it makes sense though.
It makes sense, but it makes sense. But
rising oil prices put the most pressure on small caps.
Yeah, it makes sense. But if you understand this, that there is a put pricing skew, it can also help you formulate your options trading strategy around it. Because it's better to buy put butterflies in a put pricing skew than, for example, put diagonals or put calendars. So this kind of information help the experienced options traders to find candidates and to formulate the ideas and the option strategy around it. It's not like a crystal ball that, okay, I see IBM and then I can make money with it. It's just a filter that if somebody has specific ideas, let's find high implied volatility, let's find high IVR, let's find the ones that have high IV, but the IV is decreasing in the last 5 days. That's a good candidate, for example, for J lizards. This is a screen that's still under development because we also have a lot of new ideas that we would like to implement into it. But right now, this is the current state of it. People can play around with it if they want, if they are interested in swing trading. It's definitely not for the day trader type. So it covers all the tickers that we have implemented in TanukiTrade. It's around 200 symbols, the most liquid ones in the US market with ETF indices. As you know, we already have futures. So you can also look for E-mini, the NASDAQ and the rest. If you go back to, for example, GEX Lab, you can look for the ES. So if you are interested, we can create another session later on with the options screener for the swing types. But right now, this is just a brief introduction about it.
If we're looking at today, right? So basically, pretty sure yesterday the put wall 1 was at 590, but today it moved down to 588 as the market is drifting down. And as you can see, like when we hit the 590 area, basically like 2 scenarios can happen, right? Because this is like that big reactionary zone. What we can expect to happen is scenario number 1 is the put holders, now that their puts are in the money or at the money, this would be a good time for them to monetize their puts. And if they monetize their put, that will create a support for the market to bounce. That's scenario number one. Scenario number two, if there's still a lot of bearishness in the market, these put holders can now roll down their puts to like a further out of the money strike. And if enough people do that, or if there's new put buyers coming in, then the put wall one can move down, right? And you'll have a different level below that. And that will show you, at least from my experience, that will show you that you can expect more downside on that particular day, right? And in that scenario, it's like not very smart to try to do like a mean reversion type of trade, because clearly there are more traders betting for downside. And if you try to like do the opposite trade of them, there's less probability of you being successful versus like going with the trend and trying to bet for more downside.
Yeah, I agree with you. And that's why it's important to see the put walls and where the next put wall might come into play.
Yeah.
Because as you mentioned, if people are rolling their puts, that's another buying pressure on the put side, which creates a shorting pressure on the dealer side, which creates a downward spiral by hedging the underlying by shorting it. So that's why it's it's a downward spiral. So that's why it's important to see where those levels are, and as I mentioned, how the market reacts to it. Like what's the momentum at that level? Without knowing the level, it's hard to measure where to watch. This gives you a structural map, like where to pay attention, where to watch your positions.
Yeah, and I think it's super helpful to have that map in front of you so you can like set the price alerts ahead of time and just get the alert when price reaches that level to see like how it will react instead of being like unprepared. So I think this gives you like more confidence to understand where to watch and like how to react when price gets to that level. And I've also seen a scenario where the put wall will move up as well. And that ties back into the scenario number one, where like people are monetizing their puts, right? And so you'll see that the puts wall will move up to a higher level, and that in that case, it actually makes sense to try to do a mean reversion trade or to like go long, right? Because you can see that people are closing out their puts, and now on the call side, usually as well, you can see volume coming in from the call side as more and more traders try to take the opposite trade. Would you say, Gery, like this view is what you use the most?
Yeah, with the daily settings and not
Okay,
zero
yeah, for
DT.
swing trading.
Yeah, and not zero DT. There are two things I would use: the all expiry or the specific expiration I trade in. So, for example, if I open a calendar diagonal combination for, I don't know, in 2 weeks, then I would like to watch that expiration and how that outlines in here. So if I'm building up a position for March 27, I want to see the net OI, the net GEX, detailed sometimes the net volume in here, and the chart, and the chart itself in a daily fashion, zooming out, seeing the context first. What's the big picture? So it's not enough to only see the GEX levels. For a swing trader, I believe you need to understand the whole big picture, the context where we are trading in, and then zoom into it. Like the volatility regime is negative now. Where are the levels? What is the volume? That's why I want to see the volume. For example, if I'm trading a bounce here, I want to see volume. I want to see volume confirming it. That's why it's important to also check the volume and check where the open interests are. For a swing trader like me, for example, if I think that I have reached the target price of my calendar, whatever it is, there is always a target price, a short strike, for example, then I would consult the GEX levels and the volatility map if I want to scale out how the market reacts to levels. For example, if I have a calendar diagonal combo on the upside and the market just dips below HVL, I want to see how far we are below HVL, how negative the GEX zone is, and then I can think about hedging the position. So creating a hedge, scaling in, scaling out of the position, that what is, in my view, helpful to see these kind of options metrics and the GEX and the volatility regime we are trading in. So for example, if I'm hedging a position and the market just hits the highest put wall and reacts to it in a way that you also mentioned, that the market bounces. And I think that it will keep bouncing it. As I am watching the momentum, I might scale out from the hedge, like closing one part of the hedge or rolling the hedge, or just scaling out from the other part of the position. So in my view, this is how I use these tools in swing trading. I cannot tell you anything about day trading because I'm not using it. I'm not a day trader. That's I'm interested in your own methodology, like how you use it in 0DTE. Like,
Do you also set alerts at these, important level just so like you can go in and watch the chart when price reaches them?
yes,
Okay.
I set alerts on the TradingView.
Yeah, that's what I do too. That makes sense.
Right now, we cannot set alert in the TanukiTrade web app, but we are working on features like that in the future.
Yeah, I think that would be a cool feature.
Yeah. What's your main use about these tools in 0DTE?
I use the GEX Live table, but like I said, after what we talked about today, I'll probably switch over to the chart view. But for me, so I typically look at the 0DT expiration or the 1 DTE if I'm selling something for the next day. I specialize in selling puts, and usually I will sell future options. So for QQQ, I'll be selling NQ options, and then for SPX, I'll be selling ES options. With the QQQ GEX, typically what I would look at is like some of the levels that we talked about, right? So where's the high volatility level? Where's the call wall number 1? Where's the put wall? Put wall number 1 at 588. If things get really bearish today, then 588 I would say is the target to hit as we continue the downtrend.
And then the market hits 588, you start shorting the put?
Yeah, so when the market hits 588, that's when it would be better for me to start scaling in put sales, right? So if I were to sell puts, I would wait until we hit 588 or a little bit below, because I don't want to like try to get into this area while there's still a lot of volume here, because that tells me like there's a lot of positioning that's still pretty bearish waiting, right? And while we're in a negative gamma regime, it's more likely that the trend is going to continue until we hit a major level. So it's better to be patient and wait for it to hit this put wall number 1 to then scale in any like short puts or put sales versus like doing it above. And once we get to here, the put sales that I would do is basically anything that is below or at the next larger level. If I were to sell like NQ puts, I would look for an equivalent NQ strike of like 585 or below. That's how I would go about it. And I would start scaling it in, not do everything at once, just because, like I said, like once we hit this level, there's also the scenario where like the put wall can move down as people become more bearish and roll down their puts. So you have to like think of that happening as well. And so you don't want to just allocate all your capital at once here. And
so you start scaling in at 588.
Yeah, I just have to be ready to have capital deploy in case we do move down to like even 585. And if I were to sell something that's 1 DTE, that's when I would look at the 1 DTE map. So usually this would be something I do during the Globex or overnight sessions, right? Looking at the 1 DTE, actually tomorrow looks better than today's positioning. The highest put wall right now is at 590 for the March 20th expirations, and the high volatility level is at 600 versus today, as we saw earlier, the highest put wall is at 580. And this makes sense, right? Tomorrow is the March monthly expirations, and I think like the 590 and the 600s has been very big level for a long time now, and so the OIs is still there for those levels. If anything, if based on what I see right now, probably today would be the day for things to bottom out if we continue to have this strong downtrend, and potentially tomorrow would recover a little bit, and then next week would depend on whether anything happens over the weekend, just because we have a lot of crazy thing going on right now in the whole Middle East conflict. That's currently my view based on like what I see with GEX.
So mainly you are using the GEX live table.
Yeah. And I think also something to know is when we are in a green day, that's when I look at the call wall a lot as a target. There's been a lot of time when like for example, the call wall would be like way up here at 608, and then price would be like at 599 or 600 to start the day. When you just start the day, like without that GEX data, you wouldn't think to target 608.
You don't see the
Yeah.
map.
Yeah, without that map, you wouldn't just randomly guess 608 as a number.
Yes.
But with this information, you now can make more data-driven decision is what I would say. And a lot of time I have seen it reach the call wall number one target on a very green day. Like even though we start the day $6-7
Yeah, that's what I wanted to ask. That based on
behind.
your experience, how many, in terms of percentage, how many times does it hit the core wall, the primary core wall, if you are targeting the upside during zero DTE?
I would say between 60 to 70%.
And
So
you are trading that target with a core spread, like a shorting the target price, or still shorting put on the downside?
on those days, I will be selling puts just a little bit below the high volatility level.
Yeah.
And then people who are more aggressive will also like be longing futures directly or buying calls.
Buying core spreads, targeting the highest core
Yeah,
wall.
targeting the highest call walls.
Because if you think that the core wall would be the target, I know people who are trying to pin that target with buying a butterfly, like a 10 white butterfly, 20 white butterfly, or spending more money on a debit spread, buying bull call spreads, targeting the short strike on the core wall that you mentioned. So most of the time, the market hits that in your experience.
I would say the market hits the put wall more than the call wall. It makes sense, right? Because when we're in the negative gamma regime, the trend will continue,
Yes.
right? And so there's higher likelihood to keep falling down until we reach that large level where everybody reacts to it.
Talking about the levels and the volatility regime, which one would you prefer, trading in a positive GEX environment or negative? Below HVL, above HVL, which one is better for you?
It's a little bit counterintuitive because my strategy is selling puts, but I actually love negative gamma more because as a premium seller, you get more
More.
premium when things are looking really bad, right?
Make more money, but it's a little bit more, risky or more.
Yeah, definitely. It's definitely riskier, but as an insurance seller, you make more money when people are scared.
A little bit stressful, but more money.
Yeah, in positive gamma regime, like things are definitely easier, but VIX is low, so you don't make as much in terms of the premium received.
In terms of the swing trading, what I do is in positive gamma environment, I tend to buy calendars, diagonals, and all the combinations of time spreads. And in negative gamma environment, either I like to trade 50, 60 broken wing butterfly, put broken wing butterfly for SPX, which means 50 is on the upside of the broken wing and 60 strike difference on the downside. So it's a broken wing with a flat delta or a little bit negative delta for a credit. That's very good in a negative GEX environment, or like a put ratio spread or a Jade Lizard or something that makes money.
Jade Lizard, yeah.
Jade Lizard, when implied volatility is high, it's usually in negative GEX zone, right? And when we are in negative GEX zone and implied volatility high, and if I think that the market might stall at a put level or a technical zone, then it's very good to start trading with a put ratio, with a J Lizard, with a put broken butterfly, all the structures that harnesses data and implied volatility decrease. From the swing trading part, that's also important to note that consulting the GEX levels and the volatility regimes and these zones might help you understand and evaluate where you are in terms of the context of volatility.
I agree. I will also say from a zero DTE perspective, if you want to play lotto, it's always good to like have put debit spread or call debit spread targeting like either the call wall number one or put wall number one. Those are very good type of lotto strategies, especially for days where you see a lot of puts like today. It makes total sense to try to target like 588 or even 585. Right.
With a put spread.
Yeah, with the put
And
debit spread.
how wide do you make the lotto? Only one strike difference or a little more?
Well, I mean, here I would make it like 588 to 585.
Okay.
Because if people were gonna roll down their put, I think they would go down to 585 next.
And do you ever target it with a butterfly, like a narrow one?
No, I don't
That's
do that. I don't do that much about butterfly, but I think you could do butterfly here if you wanted to.
Or a little broken wing maybe on the downside.
Yeah.
And do you ever target it, like, do you ever trade iron condors or anything like that during the 0DT?
I don't trade iron condor.
Yeah, me neither. I'm not an iron condor guy.
Yeah, I feel like with iron condor, you have to like be really good at legging in and out. You can't just like, you know, mechanically set it and then hope that it goes well.
Yes.
I've seen a lot of people like get blown out by iron condor,
Yeah.
both ends, especially if you have like a stop loss based on your premium. I've seen a lot of people get stopped on both sides.
Yes, it's hard to be stopped out.
Yeah.
With whipsaws.
And then I think to wrap up, where are your social? How can people find you?
You can find us on Medium. We are writing different articles. You can find us on Substack. You can find us on YouTube, on X. If you are a member, you can also contact us on Discord.
Yeah, and I know Gery and Greg, TanukiTrade's founders, are very active on Discord, so you can always chat with them.
Yeah.
Well, everyone, thanks for watching. As always, if you want to try out TanukiTrade, we'll have the links below. Use my link for 10% off. And if you have any questions, post your questions in the comments or post them on TanukiTrade's socials.
Thank you for having me.
Thanks, Gery. It's nice talking to you.
Bye-bye.